Hi guys, welcome to our channel Beyond Stocks. Today we're going to speak about a fund which is Parag Parikh Tax Saver Fund Review. In this particular fund, we would be covering topics like fund details, the investment approach of the fund, the investment portfolio managers of the fund, and the various positives, negatives, and the sector-wise allocation of the fund. So if you like this video, do not forget to like and subscribe our channel because this will help us reaching many people apart from you, and it will help to grow our channel as well and it will keep motivating us. So let us have a look ahead. So talking about the fund details of Parag Parikh, first comes the expense ratio. For this particular fund, the expense ratio, that is the commission which is charged by the fund house, is 1.19 percentage, which is, if we compare it to other funds, it is quite high than other funds because this is typically a very new fund which is there in the market, and not many people know about this fund, and there is less corpus invested in this particular fund from very less people. So as and when many people start investing in this fund in the due course of time, we will see there is a lot of money flow which is coming in, and which will eventually, of course, reduce the expense ratio over here. So that is something which we can look at in the near future. Apart from that, one positive thing which we see here is there's no entry load and exit load on this fund. That is, when you buy this fund for a lock-in period, and when you sell this fund, there is no particular charges which will be levied to you. So we came across a lot of interesting facts about this fund. So one of the fact which we came across is this particular equity linked, it's a ELSS fund. It's a 3-year lock-in period fund from the date of investment. As in, if you buy this particular fund today, and you could only sell this fund after 3 years, that is in 2024. Before that, you can't sell this particular fund. So hence because of this particular lock-in period, we do not have any exit load here, because any which ways you won't be able to sell within 1 year. So generally exit load is levied because people sell it in a very short duration of time. But as this particular fund has a lock-in period, we don't have any exit load. Other than that, you get a tax deduction on your salary, that is under section 80C, up to a sum of 1.5 lakhs. So if you buy this fund, you get a deduction of tax up to 1.5 lakhs under 80C deduction, and which would save your taxes, and you can, while filing ITR, you can claim that particular thing under ITR. Apart from that, one interesting thing again is this particular fund invests 80% of its corpus into Indian equities. So most of the companies which the fund invests are Indian companies and not foreign companies. Just like we pay taxes on other funds, here too, if you sell the fund after 3 years, you would be paying 10% tax on the profits which you gain from this particular fund. It is a flat 10% rate. And this particular fund has been launched by PPFAS mutual fund. So it's a very well-known mutual fund which every one of us knows about. And so let us look at the sector-wise allocation and the companies which the fund is invested in.
Let's now look into the investment approach of this fund house, Parag Parikh like fund house. Let's look into the investment approach. So we are guided by timeless principles of value investing. So I have found like this is one of the rare funds in like Indian mutual fund industry, which actually follows the value investing principle. So if you see here, like we view equity investing as purchasing stakes in business. That means whenever they are buying some stocks, they are eventually becoming the owners of that company, right? That's how they see themselves as. And also they try to avoid overpaying for any stocks. That's what value investing is basically, like do not overpay for any stock. And also they prefer like cash generating business, and also the business which has very low debt. So they are mostly targeting those, as we will see later, their stocks portfolio, like almost all of the stocks are like they generate a very high cash, and also they have very low debt. Other than that, if you see, they also, I mean, invest in those management, like which I will say, take care of the interest of the minority shareholders. So whose management is actually good. And also, I mean, this line is very important. We stay away from the periodic fads and fancies in the stock market. So currently there is the bull market, and every stock, if you touch, I mean, they are going 10%, 50% higher every day. So their approach is a bit different. They do not like go for momentum kind of stocks. So they believe in value investing. And this is all the principles that they apply to this Parag Parikh tax saver fund also. And this is very important to understand here. The reason is this mutual fund, if you see this Parag Parikh tax saver fund is a kind of new fund. And the data for this fund is not much there on the internet, right? So that's why it's better to understand like how they are approaching this, how they are selecting the stocks here. And they have also mentioned like which investors who invest in this fund. So they have mentioned that, I mean, you should understand the equity investments are ideally invested only for long term. So if you're only a long term investor, so this is already for 3 years, right? But it's not that, okay, you should only hold it for 3 years and sell it. Long term is more than 3 years, like maybe 5 years, 10 years. If you can hold this fund, then it's better for you. And also they prefer simple investment solution rather than complex ones. So if you are like if you want to select some simple kind of investing solution, then this is one for you, because as I have told in the previous slide, they do not go after momentum stocks, and they only invest in companies which are like very good generating cash, good management, and also debt, very less debt. And also the last point, like they welcome those investors like which do not fear when the markets turn volatile. For example, in the March or April of last year when the markets are so volatile. So if you prefer like, okay, if you can be there in the markets at those volatile times also, so this is the fund for you, because they are approaching the long term. They have an approach of long term, not like 1 or 2 months or 1 year. So these are very some important points about this fund, their investing approach.
So these three gentlemen are the portfolio managers for Parag Parikh funds. Like they manage almost all the funds from Parag Parikh. So Mr. Rajiv Thakkar, he is the CIO equity fund manager. Mr. Ronak is the research head, and Mr. Raj is the fund manager for debt funds. So if we see the allocation by market capitalization, this particular fund holds most number of large cap companies. That is around 42.31% is into large cap. Then comes mid cap, that is 31.68%, and then follows a small cap, that is just 7.8%. Also, if we see the sector-wise allocation, the highest sector which is allocated is in financial sector, that is close to 31.3 percentage, which is like almost the highest one amongst all the sectors. Then comes technology and automobile, holding 21% and 12.4% respectively. And the least one is FMCG, which is close to 11%. So let us talk about the companies or the stocks in which this particular fund is invested in. So as Shivam mentioned in the previous slide, this particular company focuses on funds which are cash cows for them, also which has low debts and which has a very good management, who has a very experienced management in their company. So the top holding of this particular fund is ITC Limited, which holds close to 7.86% of this particular fund. Then comes Bajaj Holdings and Investment, which is close to 6%. Then comes Persistent Systems and Indian Energy with 5.7 and 5.3%, and rest are like Wipro, Hero MotoCorp, Maruti. Then there's TCS as well, holding 4.76%. So these all companies, if we see, these are the top 10 to 12 companies. These are very cash generating companies, also with very low debt, and the management is quite good if we check the management of these companies. So the fund focuses on these particular factors, and they have chosen these companies to be their top stocks.
So at last, we will also look at the returns of this portfolio. So this, as I told, this is a very kind of new kind of fund, and this started in 2019 itself. So if you see here, the since inception is 24 July 2019. So this is the kind of, you see, I mean, around maybe 2 year old fund, less than 2 year, 1.5 year maybe you can say. And if you see the returns since inception, the returns, if you see the annualized returns, basically you will see at a CAGR returns, it's around 28%. And in the 1 year, it is 32%. So of course, there is the bull market out of 2019, and so the returns are quite high here. But I do not think that the returns should be that higher in the long term. Ideally, you should not expect 25 or 28% in the long term. What you should expect is maybe close to 12 to 15% returns. And I think this fund has the ability to generate like those type of returns, 12 to 15% returns in the long term, because you will be holding this for at least 3 years. So you always have to think about long term, not short term. Also, past performance is not a guarantee of future performance. Do remember this. In the past, if you see, okay, last 1 or 2 years, of course, 28, 30%. So do not think that these returns will be possible in the future also, in the next 3 to 5 years also.
So this was our, like as Shivam told, do not expect the past returns as your future returns. The fund did give a good return in the last annualized return, that is around 30%, but we cannot expect a 30% return in 2021 or 2022 as well. So do your own research and expect a standardized return from a mutual fund. So that depends on the market also as well. So let us know your thoughts on this particular Parag tax saving fund, and would you be ready to invest in this fund to save your taxes this year? And like other than this, what are the tax funds which you are looking at apart from Parikh fund? Let us know. We would love to research about those funds as well. And if you like our content, do not forget to share it with your friends and colleagues as well, so that they can also save their taxes this year when you file ITR. Thank you.